I hope you all are doing well and you are safe. Today, I have an update regarding Tata Group stock, which jumped about 4% yesterday after the results for Q4 FY25 were declared. So it's about 113% year-on-year increase in net profit. So we'll quickly go through some information here. The board has recommended a dividend of 7 rupees per share on the face value of 1 rupee for the year FY25. The dividend will be paid out after 5 days from the end of the upcoming annual general meeting. So we'll start off. Market capitalization is 41,873 crores. It is the company Voltas Ltd, which manufactures, engineers, uh, air conditioning, refrigeration uh, products. So market cap we just went through. Net profit growth of 80% quarter on quarter, 113% year on year. Q4 FY25 revenue was 4,768 crores, 53% growth from the last quarter, which was 3,105 crores, 13% increase in revenue from 4,203 crores in Q4 FY24 to 4,768 crores Q4 FY25. The net profit increased from 131 crores to 236 crores. That is from the last quarter, increase of 105 crores, which is 80%, and the net profit uh, from 111 crores to 236 crores between Q4 FY24 and Q4 FY25. So that is the difference. Important disclaimer: all investment opinions and recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. These views do not reflect personal opinions or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any loss resulting from the decisions based on this article. It is strongly recommended you consult a financial advisor before making any investment decisions. So we'll quickly go through some other details as well. You can see the price of the stock today is at 1,237, which is 1.14% up from the previous day's close. You can see the last 15 days about 1.25% up, the last 1 month a minus of 3%, last 6 months minus of 30%, and the last 1 year a minus of 3%. So this stock has been impacted due to the correction in the stock market in October last year, since October last year. So that is the reason why whatever the gains that had made in the earlier part of last year have all been wiped out. So we'll continue further. Uh, you can see cash of 504 crores, debt of 404 crores, book value 245, face value 1, price to earnings ratio of 52, which is slightly on the higher side. Uh, it should be ideally between 20 and 25, but since it's a old company and it's been in this business for a long period of time, uh, this is considered slightly higher. Earnings per share for last 12 months is about 23. Promoter holding is about 30%. Return on equity is about 8.5. Sales growth is about 13%. Return on equity, uh, return on capital employed is 10.4%. Profit growth of minus 57%. You can see comparisons between Voltas, Blue Star, Amber Enterprises, Johnson Controls, EPAC Durable. So you can see the EPAC Durable 3,000 crore market share, Johnson's Control 4,700, Amber Enterprises 20,000 crores, Voltas 40,000 crores, Blue Star 32,000 crores. Then price to book value, you can see Blue Star has a price to book value of 11, which is pretty high. Amber Enterprises all 11 as well. Johnson Controls 8%, 8 times. E EPAC Durable 3.39. Then you can see price to earnings ratio of 52 for Voltas, 68 for Blue Star, 162 for Amber Enterprises, 91 for Johnson Controls, 66 for EPAC Durable. So I think the lowest is Voltas, uh, which is something that you can, consult a financial stockbroker and see if there is any scope for growth. However, because this is a seasonal kind of business, uh, it would again depend on what other value add products that the company can bring into its portfolio to have a year long consistent revenue growth and profit growth from similar lines of business. So some business that is has a high growth potential with consistent revenue and profit growth. Ignoring the seasonal aspect of the business uh, to bring consistency in operations revenue. So EPS, you can see earnings per share 23. It depends on the price of the share. Again, Blue Star earnings per share 23, Amber Enterprises 35, Johnson Controls 19, EPAC Durable 5. Then you can see comparatively return on equity. Blue Star has a very good return on equity of 20%. Johnson Controls a minus of 12%, so highly concerning. EPAC Durable 6% return on equity, which is low. Amber Enterprise is 2.5, again very low. Uh, Direct institutional investors 33%, which is good. Promoters 30, then FII is 22%, which is good stability for the company in terms of volume and in terms of price. Public is at a minus 14.5. Sorry, 14.5. Company is debt free. Company has healthy interest coverage ratio, efficient cash conversion cycle of 8.6 days. Company has a poor profit growth of 2% for the last 3 years. Company has poor revenue growth, 11% in the last 3 years. Company has contingent liabilities of 2,450 crores. Then company has a high trading PE of 52, as we discussed earlier. Company is trading at a high EBITDA of 36. Voltas is engaged in the business of air conditioning, refrigeration, electromechanical projects as an EPC contractor both in domestic and international geographies, the Middle East and Singapore, and engineering product services for mining, water management, treatment, construction equipments, and textile industry. So, apart from refrigeration, air conditioning, you can see other projects that the company also does. Engineering product services for mining, water management, and treatment. So it does have a versatile kind of you know diversified kind of business product range. So I think the company, we need to look at the financial results for the last few years. Based on that, it could give us a better idea of whether the company is able to generate consistent revenue throughout the year with consistent profit margin as well. So Voltas was created 6 decades ago with Tata Sons joining hands with the Swiss company Volkart Brothers. Voltas is also one of the most reputed engineering solutions provider specializing in project management. The company has 5,000 plus customers, sites actively managed across India. Then book value here is showing 197, stock P 49. The return on equity shown on this site seems to be better than the other website. Face value of the shares 1 rupee. Stock is trading at 6.28 times its book value. Company has low return on equity of 7.6% in the last 3 years. Company has been maintaining a healthy dividend payout of 68%, which is very good. Then you can see similar comparisons here. Only Amber Enterprises and Amber Enterprises is missing from here. Uh, about Yeah, you can see 4 companies there. I think there were about 6 companies there. So Amber Enterprises, possibly one more company. So again, you can see uh, starting from 3,000 crores to about 41,000 crores. You can see sales. See again, you can see 5,000 crores in June, 2,600 crores in September, then 3,100 crores in December, and March it is again up to 4,768 crores. So again, this is what I meant by the inconsistent performance. Same applies to the net profit. June 335 crores because it covers April, May, June, 3 months where the peak summertime where there's a higher demand for air conditioners, and that could be the reason why the sales improve at that point in time with improving their net revenue. And then again, September and December quarter, uh, sales are less, revenue and I mean profit is also less. You can see March quarter again, summer is expected. The summer has probably started in the month of March, which is why you can see an improvement in the sales. Net profit has improved as well, however, still far away from the revenue and the profit that it managed in the June quarter last year. You can see sales have grown year on year. Profit has also grown from 500 crores to 800 crores in the last 4 years. 2023 and 2024, the profit margin was quite less. The net profit was impacted, I think, due to uh, not a great performance in terms of revenue as well. However, the revenue has been growing. The profitability in the year 2022 FY22 was amazing, 500 crores, and the other subsequent 2 years the profit has gone down below half, and this year it has picked up again. However, the revenue has doubled and the net profit hasn't doubled in respect to the profit that it had made in FY22. So thank you for watching, friends. Wish you keep a track of this company and consult a financial stockbroker to see if it is worth investing for an upside potential so that the company could uh, give a good return in this quarter, which would be could be slightly less compared to the previous years as well. So thanks for watching. We'll connect with another video tomorrow and see how we can get you some more important information. Please share this with your friends, family, and associates so that they could benefit from this as well. So thank you for watching once again. Yeah, this is the ratio part we didn't cover, so you can have a look. Working capital days have increased to 64. Then this is already what we've covered. So thank you.